Daily news and analysis. We keep you informed and inspired.
This is World Today.
China has launched a party-wide campaign to reshape how officials correctly view governance performance. JP Morgan and UBS boost Chinese asset holdings, and a top U.S. security official resigns, citing no imminent threat from Iran. Welcome to World Today, a news program with a different perspective. I'm Anna in Beijing. To listen to this episode again or to catch up on previous episodes, you can download our podcast by searching World Today. Our top story: China's top leadership has launched a new party-wide campaign aimed at reshaping how officials correctly view governance performance. Issued by the General Office of the Communist Party of China Central Committee, the directive call on party members to develop and practice a more people-centered understanding of what it means to deliver results. Running from late February through July, the campaign will target leadership's teams at the county level and above, with a particular focus on top officials. At its core, the initiative urges officials to respond directly to public needs and translate governance into tangible benefits for the people. So to delve into this, joining us on the line is Dr. Yao Shujie, Changhong Professor of Economics at Chongqing University. Thanks for joining us, Professor.
Hi.
Professor, when discussing China's economic rise and development model, one term frequently comes up in Chinese, that is 政绩, often translated as officials' performance in governance. On the eve of the Spring Festival, during President Xi Jinping's visit and greetings with grassroots officials in Beijing, he stressed that we should guide party members and officials to foster and practice a correct view on performance and strive to deliver solid achievements that stand the test of practice, the people, and history. So, based on your understanding, what constitutes a correct versus an incorrect understanding of governance performances?
Well, in my view, there's no absolute distinction between the correct and also the incorrect. You put in quotation mark, of course. But I think this actually is an evolution from the social economy change and people's awareness of government performance changing over time. So it is a dynamic concept to a certain extent. But why, shortly, Xi Jinping, the president of China, is emphasizing a correct, view on government performance. It means that it's not the strictly meaning of the English word correct or incorrect. It actually means that it should be, in English term, I should suggest a more appropriate view of the government performance. And this is a new term to a certain extent, because in the past, when we say a more appropriate performance of local governments is to drive the economic growth, have better employment so that people have a physically better life. For example, like food and other necessity, and also housing and other things, education and healthcare. It's all people-centered because China is a socialist country where the interest and the benefit of the people is the most top priorities. And the ultimate goals of economic development is for the betterment of people's livelihood. I think this is probably the historical background of what President Xi is mentioned about the correct government performance. But in my view, I think, the so-called correctness, in a way, that it have to anchor on people's happiness and people's recognition of government performance, rather than on a very single-minded macroeconomic indicator or based on the superior opinion of the people who are working underneath. So this is the changes in the focus of assessing local government performance. In the future, I think on the one hand, you have to have a bottom-up approach to see whether the general public is happy with the local government performance. And secondly, you should have a more comprehensive indicator rather than a single term indicator of economy performance. It got to be not only the economy performance, but also the social change to the better or people's like, rather than change to the worse at the expenses of simply focusing on a growth rate of the GDP, for example. We should look at the general improvement of people's happiness and also satisfaction of the government at the local level, at the medium level, and also the central level. So this got to be a comprehensive view of future government performance, in my view. And this is exactly what President Xi Jinping mean about. That's my one personal interpretation on this issue.
Mhm. Professor, this raises also a very interesting comparison. In many Western political systems, ideally, a politician's performance is often judged by whether they deliver on campaign promises within a term. So, in that case, can performance really be reduced to votes? What's the key differences in how the system or mentality works?
Well, I don't think that a voting system is the ultimate and also the best judgment of government performance. As you can see, a lot of Western government, they rely on the so-called human right and democracy, and also promise of how to deliver the policy goals. But once they resume, once they take on power, what they do is mostly fully contradictory or inconsistent with what they promised to do for two different reasons. The first reason is in order to attract voters' support, lots of politicians, they over-campaign what they can do and what they can really achieve. And on the other hand, they may hide something which behind for their one party or small group interest. And this is a problem of the voting system fundamental illness to some extent. Of course, I mean, people can vote them out and they can vote them in if they do the job badly. So this is why there are certain extent of guarantee that the voting system may have some sort of level of performance. But most often than not, I think we can see a lot of dissatisfaction from the perspective of the general public. You can see I live in the UK. I see the problem of the United States. These are, turn out to be, they call themselves the largest democracy and the standardized democracy of voting in the world. But mostly, I mean, people, they are fairly unhappy about most government once they took power. And this is why their support rate tends to decline up to they resume the office. So I don't think this system is not is really working very well for the general public interest. There's another issue. I mean, people are voting into office. They can only probably have just slightly more than half of the voter support. The other nearly half people, they are actually not supporting. So even from the voting system, it doesn't guarantee that right from the beginning, people in general are happy. There's only some people they believe that this party is probably better than the others. And after they vote their party into power, they find that they are very disappointed by the outcome. And this is a kind of problem that we see in the voting system.
Professor, earlier you mentioned a people-centered approach and long-term planning. At the current stage, especially as China entered the opening phase of its 15th five-year plan, what does this correct view or right view of a performance actually look like on the ground, and how it differs from previous stages?
In the previous stages, sometimes we generally believe this is correct because of economic, growth and also, general expansion of physical income of the general republic. Based on this, we think, and it's, for example, like infrastructure, like, general improvement of the living environment, we generally believe that these are the kinds of correct performance. However, the need this concept, the so-called correct performance, putting in quotation mark. There are some social and economy long-term, development issues. For example, like we have this education reform, we get into the situation that most of parents, they are living anxiety and the so-called competition among the school are so intensive that we can see people are suffering and parents have to spend a lot of money. Healthcare, yes, we have done a lot of things, but the equalization of healthcare services at different level is also highly uneven. And the environment in the past, economic growth have generated a lot of air, water, and soil pollution that damage people's health. Now, in the new era, under President Xi Jinping, let's say from 2012, the central government have emphasized more on the social, environmental, and other equality issue. So the inequality have been relatively declined, especially rural-urban divide, and also per capita income GDP is relatively declined, which is very good in a sense. And also the general environment has been improving under President Xi Jinping's idea of golden mountain, equal to some sort of green water and green mountain. So this concept idea is penetrating into the general society, and I think it's making a lot of improvement. However, nowadays in the future, I think because China aims to achieve the socialist modernization, the socialist modernization have different characteristics, especially for the general public, for the environment, and also for the equality between the society and open up to the world and combining the physical and psychological happiness of the people. So it means that the new index of government performance have to reflect this new idea of development in the future, scientific innovation, coordinating development between regions and between different segments of the society, and also the economic outcome have to benefit all the people rather than just a small group of people. So this concept, future development, I think is encouraging, but it has a long way to go to change people's mindset, especially the local government officials. What they really need to achieve, I think they have to satisfy the general interest and happiness of the people. They also have to maintain a sustainable environment and also have steady economic growth so that make sure that employment will not be suffer and people's income will not be suffer. So it is a very challenging task, but it's very interesting and it's very encouraging for this concept issue to roll out at the central level.
Thanks, Professor, for those valuable insights. That was Dr. Yao Shujie, Chong Kong Professor of Economics at Chongqing University. Coming up, overseas funds like JP Morgan and UBS boost Chinese asset holdings. This is Road Today. Stay with us.
Welcome. I am Chu Zhang, Deputy Director at the Center for Middle Eastern Studies at Fudan University. On the World Today program, we will dive beyond the headlines to uncover the stories, trends, and impacts that connect states across the globe. Join me on World Today.
You've been listening to World Today. China's capital markets are drawing renewed attention from global investors. According to data from U.S. financial services firm Morningstar, JP Morgan China Fund doubled its holdings of Chinese companies such as Alibaba and Tencent Holdings in January. UBS China Opportunity Equity Fund increased its holdings of Chinese battery giant CATL by 82%. Aside from these moves, other foreign financial institutions have also voiced bullish views on Chinese assets and the nation's economy. With more, Zhao Yang spoke with Yan Liang, a professor of economics at Willamette University.
So, Yan, thank you very much for joining us. Overseas funds have already increased holdings in Chinese companies like Alibaba, like Tencent. So, what is driving this renewed confidence in the Chinese assets this year?
Well, you're right that a lot of the foreign or overseas funds, right, like JP Morgan Asset Management, and also like the UBS Group, as well as many of the sovereign wealth funds, they have now increased their holdings of Chinese assets, particularly in tech, in new energy, and also in some other more sort of a high value added sectors. And I think the reason for that is mostly the Chinese stocks are still relatively low valuation, so there's still very much room to grow, and the earning has been quite strong, so there is a strong growth potential. And there's also a lot of positive policy messages that are released by the new 15th Five-Year Plan. And finally, I think really the corporations' innovations and all these technological innovations and breakthroughs, I think all of this have driven this new renewed focus on holding Chinese assets right now.
And some analysts say Chinese stocks offer diversification benefits because they move differently from the global markets. So what do you make of that? And for long-term investors like pension funds and mutual funds, what really matters for them in China's market?
I think that's a great point. I think when it comes to diversification, we know that in the previous years, many of these funds that are still underweight on China's exposure. So now I think with a lot of reasons, right, both in terms of economy, as I mentioned earlier, China's economic fundamentals are very solid. And with now renewed push on technological innovations, I think there's also the sense of this kinds of long-term sustainable growth driven by innovations and productivity. So I think for the long-term investors, as you mentioned, like pension funds, they're looking for long-term growth. So I think they would want to diversify and also put more emphasis on the Chinese market for that long-term outlook. But otherwise, I think there are also some of the short-term or more sort of transitory and cyclical needs for diversification. As we know now, the global economy is very volatile with a lot of geopolitical tensions and armed conflicts in parts of the world. And China has been peaceful, stable, with very continuous and consistent policy and growth trajectory. So I think all of this would then again drive many of the investors from the United States and other markets towards Chinese markets.
And yeah, we are seeing portfolio rotation away from the U.S. assets. So how do you view it? Is it a short-term tactical move or maybe the start of a longer shift in global capital flow?
Well, I think that it is definitely both in the short term and long term, right, that we're seeing this kind of rotation. So in the short term, for the United States, in terms of their policy, there's a lot of volatility at the government policy level. And when it comes to the stock market, it has been driven mostly by AI. Now, the U.S. market remains to be attractive, but still, I think given the heavyweight allocation of assets in that one market, especially in the Magnificent Seven, the top tech stocks, I think the global investors will start to trying to diversify away and rotate away from the concentration of the risks. I also think that in terms of long term, we're seeing again the Chinese economy remains very dynamic, innovative because China's long-standing advantages in, for example, industrial competence. So I think that from a long-term perspective, and also with the stability of its financial market, its currency value, I do think that there is a longer-term shift towards China's markets. It does represent some sort of a long-term trend that China's market will remain attractive in the long term.
And analysts say that China's smart economy could become a major investment hotspot. How do you view that? And what sectors could benefit most from the AI integration?
I do think that China's AI Plus and its new forms of smart economy, this kinds of initiative will become very attractive, right, when it comes to investment opportunities. So again, when you look at the allocation of funds, they're mostly in these tech sectors. But China's, tech sector has grown into a really healthy ecosystem, and a lot of these technologies are also being integrated into the broader economy. So I think overall, it makes the Chinese market attractive in a more broad sense. But of course, these high-tech sectors, especially, autonomous driving, chip manufacturing, new energy, and new consumption, those will be the focal sectors for overseas investments to pour into. And I think that many sectors, as I mentioned earlier, right, as long as that represents, sort of the future technological developments, but also the sectors that will benefit the most from AI and smart technology integration, those I think really are the sectors that are going to be more attractive. And again, the 15th five-year plan have talked about, these emerging industries like, low altitude economy, for instance, and as well as the future industries, right, like quantum computing, also embody AI. So many of the sectors within those kinds of industries and companies, I think they will really be the hotspot for investments.
And China's chip exports jumped nearly 73% in the first 2 months of this year. So yeah, what do you think is driving this surge? And what does it reveal about the strength of China's semiconductor industry?
Right. So I think it is clear that, both the Chinese government, but also the entrepreneurs, they're now invested heavily in China's chip production capacity. So we know, again, China has both in terms of technological capability, but also when it comes to industrial competence, right? The very complete and mature industrial supply chain. So I think these really give China the comparative advantage when it comes to chip production. We know China is already a major producer of the mature chips, right? Those are not the cutting edge ones, but they're mostly the staple for many of electronics products and some other tech products. So I think this just shows that there is a huge demand in the world for these chips, especially some of the mature nodes of chips, and China has a large manufacturing capacity and technological capabilities to manufacture this, not only to meet its own demand, but also export to the rest of the world. So I'm seeing this as, again, one manifestations of China's technological development, and it's just formidable, right? Very robust industrial supply chain.
And looking ahead, which sectors in China do you think are most likely to attract foreign investment?
Well, I think as long as, these sectors will be in the sort of tech, more of the innovative industries, as well as, in the so-called new consumption sectors, these are the sectors that would likely to attract most investments. So as I mentioned earlier, when it comes to, some of these emerging industries, when it comes to, for example, biomedicine, low altitude economy, new energies, new materials, those sectors, I think, will see a lot of policy support and a lot of entrepreneurial efforts. And so those would attract, investors. New consumption, I think, also would be a bright spot because China is also putting a lot of efforts to boost consumption, especially service consumption. And I think now with also more and more sectors being open to cross-border investment flows, that I think those sectors would also become very attractive. So think of healthcare, education, entertainment, travel. All of these, I think, would be relatively attractive, right? Because these, again, represents the efforts to boost consumption growth in China's markets.
That was Yan Liang, a professor of economics at Willamette University, speaking with Zhao Yang. More to come. Top U.S. security official resigns, citing no imminent threat from Iran. Japan's Prime Minister Takaichi begins U.S. visit to meet Trump amid a diplomatic tightrope. Nvidia resumes production of high-performance chips for China. You're listening to Road Today. We'll be back after a short break. You've been listening to World Today with me, Anna, in Beijing. A top U.S. security official has resigned over the war in Iran, saying Tehran had posed no imminent threat to the United States. Joe Kent, who was the head of the National Counterterrorism Center, is the first senior official in the Trump administration to quit. He said he could not support the offensive because it was due to pressure from Israel and its powerful lobby in the United States. Kent has long been known for his American first beliefs and had opposed U.S. military interventions abroad. The White House accused Kent of making false claims and said President Trump had strong and compelling evidence that Iran was going to attack the U.S. first. To delve into this, let's have Professor Greg Barton, professor of Global Islamic Politics at Deakin University. Thanks for joining us, Professor.
Thanks. Good to be with you again.
Professor Barton, the first question has to be about the significance of this resignation. Joe Kent is a committed American first figure, handpicked for his loyalty. What does his resignation tell us about the internal debates and political fault lines within the Trump administration regarding Iran?
Well, I think the key thing is it does point to this internal fault lines in the Make America Great Again group, the MAGA group. There are those who are isolationist. When they say America first, they mean America by itself. They don't want to be part of world affairs. And then there are those who align more with the neocons of earlier Republican administrations and are sympathetic to Prime Minister Netanyahu's claims about the threat posed by Iran. So there's a division that runs right through Donald Trump's base. He's not going to acknowledge that one side is right because he doesn't ever want to admit making a mistake or showing weakness. But it's something he's going to have to wrestle with. And bear in mind, we've got midterm elections coming up in November. So if even a fraction of his base is peeled away, it further damages his prospects in those midterm elections.
Mm-hmm. Professor Kent's court claims that there was no imminent threat from Iran and the decision to support an offensive was driven by pressure from Israel and its U.S. lobby groups. From your perspective, how credible is this claim?
Well, this is one of these situations where several things can be true at once. Joe Kent, like most of this administration, are not of the caliber of the first Trump administration. He's not a great counterterrorism figure, no great analysis or insight. And yet there's good reason for taking seriously the point that he's making about this conflict with Iran being more in the interests of Netanyahu and his faction in Israeli politics than it is in American interest. Trump appears to have got into this conflict without a plan. He hasn't been able to articulate a clear strategic end goal, whereas Netanyahu very clearly wants America's help to weaken what they see as an existential threat from the regime in Tehran. Joe Kent is famously anti-Semite, so he buys into hateful conspiracy theories. But on this particular point, there is some truth in the point that he's making and many other in the MAGA base are making. So that is a challenge for Donald Trump.
Mm-hmm. Professor, one thing is clear is that many in the United States do not support going to war with Iran. According to a recent poll from Quinnipiac University, 53% of voters oppose the U.S. military action against Iran, while 40% support this. So in your view, will his resignation and also what he's been saying eventually have some tangible impact on the public sentiment or the current trajectory of U.S. military action against Iran?
Well, it's certainly a significant sign. I don't think that the base is going to split. Most Republicans, when polled about going to war with Iran before this conflict, were very much against it. They came around and the Republicans have supported it, not American voters in general. And that's because Donald Trump still has a fantastic pull over his base. But as we said before, with the midterms coming up in November, even a slight splintering, losing 10% of that base on concerns about the war in Iraq, concerns about the economy, etc., that really threatens the prospects for the Republican Party in both the lower house and the Senate come November.
Do you think the U.S. and Israel's military strikes against Iran are likely to conclude as swiftly as they claimed, or are we looking at something that could drag on into a war of attrition?
Well, the point about claims is interesting. Netanyahu is not claiming it'll be swift. Donald Trump is claiming it's already won and that it will be swift and just sort of mopping up. And there's a big split there, not just within the Trump MAGA base, but within Trump's own thinking. I think he's been taken into war where most analysts, including many conservative Republicans, say there is no off-ramp. He can declare victory and walk away, but if Israel keeps on fighting and if the Iranian regime keeps on fighting, if they keep the Strait of Hormuz closed because they can fire cheap drones at ships and that so insurers won't insure ships traveling through the Strait of Hormuz, then no matter what Trump wishes, he can't walk away from this. Now, that'll probably suit Prime Minister Netanyahu, who likes open-ended, unfinished wars for his own political reasons. It's certainly not good for Donald Trump or for America, and that's the tension here.
Mm-hmm. Thanks, Professor, for those insightful analysis. That was Professor Greg Barton, Professor of Global Islamic Politics at Deakin University. Coming up, Japan's Prime Minister Sanai Takaichi begins U.S. visit to meet Trump amid a diplomatic tightrope. This is World Today. We'll be back.
Hello, I am Dr. Digby James Wren, a political analyst and international relations scholar specializing in China area studies. World Today offers unmatched in-depth perspectives on China's politics, economics, business, technology and society. World Today's team of reporters and contributors provides valuable information from all of the world's major economies. I hope you can join me on World Today for the very best insights and news from China, on China, and help to build a better understanding of China's role in the world today.
You are back with World Today. Japanese Prime Minister Sanai Takaichi begins a 4-day U.S. visit to meet President Donald Trump at the White House amid concerns that she's walking a diplomatic tightrope. Tokyo is under pressure from spiraling energy costs and shaky markets as tensions around the Strait of Hormuz disrupt oil flows, a critical supply route for Japan. At the same time, Takaichi, the first major ally to meet Trump face-to-face since she rejected Trump's call for Japan and other coalition nations to send warships to the strait. So for more on this, joining us on the line is Dr. Liu Kuangyu, researcher at the Institute of Taiwan Studies at the Chinese Academy of Social Sciences. So let's start with the timing of Takaichi's trip to the U.S. From your perspective, what strategic calculations are at play on both sides?
Takaichi's visit to the U.S. comes at a time when the Middle East crisis and energy crisis are now escalating. We see the tensions in the Strait of Hormuz are rising and risk to also Japan's energy supply are intensifying. So it also coincides with the critical phase that the advancements of the U.S.-Japan trade agreement as we see the $550 billion US investment plan in the U.S., which is agreed upon the last July now, needs to be implemented. From the timing perspective, this visit, I think, serves both a so-called mission to seek assistance for Japan in addressing energy security and also strategic coordination mission for the U.S.-Japan alliance in the areas of like economic security and also geopolitical security. There are different strategic considerations for U.S. and Japan, of course. Japan, I think they more interested in ensuring their energy security and also the alliance with the U.S. on especially economic security and then tariff reduction. And also, I think Takaichi is trying to secure Trump's support on questions related to China and, of course, the Taiwan question. And the U.S., I think they're more interested in aligning the economic and geopolitical interests. We see that U.S. may require Japan to concentrate on its investment to the U.S. on key sectors like energy, like critical minerals, and AI, and thereby driving U.S. economic growth. And also, I think the U.S. hopes Japan will assume greater so-called responsibilities in the Middle East by escort missions in the Strait of Hormuz and also play a more important role in the Taiwan Strait. So I think this is different expectations.
Mm-hmm. Dr. Liu, Japan is under a lot of pressure. Stocks, bonds, and the yen are all hit, and oil prices are skyrocketing because of the Middle East. Japan relies on imports from nearly all of its oil, with around 90% coming from the Middle East. Now, Japan says it wants to buy more U.S. crude. So do you think Washington will just hand over support that easily? And how might the U.S. use Japan's worry about Middle East supply disruptions to push even harder for more from Tokyo?
Well, given the so-called triple squeeze you said, you mentioned that we can see that now any escalation in regional tensions now threatens to severe Japan's economic lifeline. So while Tokyo has signaled an intent to diversify by expanding imports from U.S. crude and securing this support, I think is still very unlikely to be pretty straightforward, particularly given Washington's recent shift towards the so-called transactional and maximum pressure foreign policy, even towards U.S. traditional allies. We see the era of so-called unconditional American security guarantees appear now waning, replaced by a doctrine where alliance maintenance is contingent upon explicit economic concessions. So Japan cannot expect U.S. to simply open the taps out of solidarity. And more critically, I think the U.S. government is likely to view Japan's now desperation not as a so-called humanitarian crisis to be solved, but as a so-called strategic lever to extract broader geopolitical and economic compliance. So Washington may demand Japan not only to commit to purchasing specific volumes of American energy, but also aligns to its broader trade policies like defense spending and also technology support controls strictly with U.S. interests. So these are all potentially at the expense of Japan's relationship with other partners like China and, of course, South Korea.
As earlier you pointed out that Takaichi needs U.S. help with energy. She also faces pressure from President Trump to dispatch naval forces to the Strait of Hormuz. Then we know every demand made to the U.S. comes at a price, right? Then from Japan's perspective, do you think he has the capacity to deliver Washington's high-pressure demands? What choices might Japan realistically take under these conditions?
Yeah, I think right now Japan's capacity to resist is quite limited. As a trade-dependent economy, we know that U.S. is at the top export market of Japan. And I think Japan cannot afford this prolonged friction. And realistically, Japan will likely to compromise. For example, on trade, may consider opening its agricultural markets, and in exchange for energy flexibility. And on security, it could boost more funding for the U.S. forces in Japan, or deepen their joint drills. And however, I think Japan will try to avoid outright submission. For example, rejecting U.S. calls to ban some Chinese technology in entirety. And also, I think Tokyo may also will try to seek hedge by diversifying their energy resources imports, like for example, imports more Australian LNG, and also strengthen their ties with the ASEAN and EU countries to reduce part of the alliance on Washington. But I think that there's an important way for Japan, that is to boost their regional relationships with China, with South Korea, with North Korea. That is, I think, when you have a very comfortable neighborhood, I think this will provide you more strength against the U.S. pressure.
Then from a military perspective, we know Japan has long leaned on the U.S. alliance for security and strategy, while also using past U.S.-led military operations to gradually expand the overseas scope of its military forces. With the early achievement of the 2% GDP defense spending target last year in 2025, and another record high defense budget for 2026, what do you make of Japan's mix of dependence and ambition? How do you assess the political and security costs Japan bears as a result?
Japan's blend of U.S. alliance dependence on military expansion, I think, is actually a double-edged sword. On one hand, we see that alliance provides so-called security promise against the so-called or perceived or the hyped regional threats from China and from North Korea on the Japan side. And on the other, it fuels an ambition to shed the post-World War II constraints and project their military power. We see that Japan is now trying to expand their SDF overseas roles. But the costs are deep. We see politically, Japan sees autonomy to U.S. strategy, for example, like supporting the U.S. Taiwan policies that risks Chinese retaliation. And security-wise, Japan is now becoming a so-called frontline state in U.S.-China rivalry, inviting countermeasures. And economically, the defense spending diverts Japan's very limited funds from healthcare, from aging populations, from social welfare, and this deepen expansion risks entrapment. The more Japan arms, and more it seems as a threat and perpetuating a cycle of insecurity. That's why many people in Japan say that Japan cannot be the so-called Israel in the Far East, like Israel, what is now doing in the Middle East.
Mm-hmm. One last question. Japanese people at home are feeling the squeeze or the hit. The economy is slowing, but the U.S. is still pressing Japan on trade. Takaichi has promised 87 trillion yen, about $560 billion US in investment to the United States. So what's your take? How might this meeting actually move the needle on U.S.-Japan trade and economic ties?
Yes, I think Takaichi's pledge is more like a gesture to ease Trump-era trade frictions between U.S. and Japan. This meeting, I think, may yield short-term wins. The U.S. could delay auto tariffs in exchange for faster approval of U.S. farm products. And however, structural tensions between these two countries still remain. Japan's trade surplus with the U.S. and U.S. demand for tech transfer, for more energy import, still exists. So in long term, I think U.S. will keep pressuring Japan to so-called rebalance trade, while Japan may accelerate trade regional deals to hedge. So that's my first perspective.
Mm-hmm. Thanks for your insightful analysis. That was Dr. Liu Kuangyu, researcher at Institute of Taiwan Studies at the Chinese Academy of Social Sciences. Coming up, Nvidia resumes production of high-performance chips for China. This is World Today. Stay tuned.
Welcome. I'm Elaf Elad, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You are back to World Today. Nvidia says it's restarting production of its high-performance chips for clients in China. CEO Jensen Huang announced this at the company's annual developer conference in California, noting that the company has received new orders and expanding its supply chain. The move comes as China accelerates domestic chip development and production. China once accounted for at least a quarter of Nvidia's revenue, but the company had been blocked from the market after Washington required export licenses for certain chips. So for more on this, my colleague Dou Hongyu spoke with Li Lun, assistant professor of economics at Peking University.
Nvidia is preparing to resume production of its H200 chips in China after a long delay. What factors may have led to this apparent breakthrough?
Yeah, so I think the key breakthrough or the key reason behind this move is we're observing that both the political condition and the commercial condition are moving at the same direction at the same time. So basically, according to Nvidia, it says it has received the U.S. export licenses, and also it says it has won, Beijing's regulatory approval for the sales of these H200 chips. So basically, this is removing a major setback or a major layer of uncertainty for both sides. And also in terms of demand, the Nvidia CEO Jensen Huang has said that he had already received purchase orders from Chinese customers, and most notably including companies like ByteDance and other tech companies. So basically, there's a strong demand in terms of these new technology. And I think another factor that's very important is that the H200 chips is advanced chip, but it's not the most advanced or most frontier product. It's based on the so-called Hopper architecture, not the newest so-called Blackwell or Rubin architecture, which is what Nvidia features as the newest or the future product for its growth. So which makes H200 a bit easier to pass the U.S. regulatory setback and also to be also adapted in China's framework. And finally, I think there's a very strong business incentive as well, because China accounted for around 13% of Nvidia's revenue, or roughly $17 billion in revenue. So this is a very large enough incentive for Nvidia and honestly Washington to treat very seriously and basically not to ignore. So overall, I think this is a breakthrough that's determined by these very important market, these technology and also conditions related to both politics and commercial.
And earlier export controls forced Nvidia to design even lower performance chips like the H20 for China. What does the shift back to more advanced chips mean for Nvidia and its Chinese partners?
Yeah, so I think for Nvidia, this is a very important move to go up the value chain in China, because honestly, H200 is much stronger than H20. Even though, as I say, it's not the newest chip, it's still going to help Nvidia defend its market share and also establish more influence in China's ecosystem. So for Chinese partners and for cloud providers or internet platforms like ByteDance or other firms like Tencent or Alibaba, being able to have access to H200 is going to mean better performance and faster deployment for its users, especially in terms to large language models or AI agents, or having this user interface and so on, so forth. So this is going to have created a huge demand among Chinese buyers, and it's also matters because Nvidia is really trying to hold its dominance of AI in China as well, because there are a lot of Chinese competitors fastly growing in terms of chip making, in terms of the applications of these AI scenarios. So if Nvidia doesn't secure its market share in this time, it's very likely to be replaced in the near future by a Chinese competitor, and that's the least thing that Jensen Huang or Washington wants to see.
You mentioned Chinese competitors, but in the meantime, Nvidia is also facing its domestic restrictions. The U.S. government has imposed licensing requirements, shipment caps, and even a 25% revenue share. How could these constraints affect Nvidia's performance and long-term strategy in China?
Yeah, so I think these rules are basically raising the cost of doing business in China, because Nvidia previously halted the production of H200 because there was some uncertainty in terms of policy approval and whether it's the right time to restart the production. Right now, it's restarting the production after we're seeing licenses were passed and orders came through. But this pattern of stop at some moment and start back again after the policy was clear is really expensive, especially for this high-end manufacturing planning in terms of customer relationships, in terms of inventory management. And secondly, you have mentioned that there's a 25% share that's going to be, basically a 25% revenue to be directly shared with the U.S. government. So that's huge dollar we're talking about. So if the Nvidia chip is sold for $10 billion in sales, that would mean 2.5 billion of that is going to be shared with the U.S. government, and that's going to greatly damage the profitability of Nvidia in China. And third, I think all of these licensing and shipment control is going to push Nvidia even further towards a China-specific strategy, basically using older architectures, using more customized products, or even design a China-tailored chip for the Chinese market specifically. So over the long run, I think these constraints are actually going to reduce Nvidia's room to scale in China, and also to reduce Nvidia's competitiveness in China as well.
And how could China's domestic chip makers face Nvidia's return? And what kind of landscape will the Chinese chip market present following the entry of the H200?
Yeah, so I think in the near term, it's definitely going to create more pressure for Chinese chip maker, because we know Nvidia's ecosystem, its developer base, its technology, its performance is still, the cutting edge, is still the leader in in this field. But nonetheless, China's most advanced domestic AI chip, Huawei's Ascend 910C is closely following the performance of these H200 and other advanced chips. And strategically, I think these foreign competitors, like the story of Tesla, it's not going to put an end to China's innovation. I think it's going to even push China's self-reliance and innovation even further. For example, Reuters have reported this week that a Chinese company is going to prepare for the production of 7-nanometer chips, and even for some other chip makers is also going to double down on the investment of these innovation. So I think overall the effect is going to be mixed. Nvidia's return is definitely going to, for some consumers, it's going to have them substitute away from Chinese chip makers and substitute towards Nvidia, and that's going to create some difference in terms of demand structure and market structure. But also, I think it's going to give domestic firms a reminder that these foreign competitors are still going to be relevant. They're still going to be affecting China's market structure. So it's important to have our own ecosystem, our own innovation, our own cost-efficient production line to be in place, so that in the long term we can still build a local ecosystem to be competitive with Nvidia.
That was Li Lun, Assistant Professor of Economics at Peking University, speaking with my colleague Dou Hongyu. That's all the time for this edition of World Today. To listen to this episode again or to catch up on previous episodes, you can download our podcast by searching World Today. For further discussion, you can also follow us on X. It's CGTN Radio. I'm Ge Anna in Beijing. Thank you so much for listening. Bye for now.